Picture this. You're 18 years old wearing your only suit, the one that comes out twice a year, walking into the most intimidating financial arena on earth. The year is 1965. The New York Stock Exchange trading floor stretches before you like a gladiator's coliseum, filled with shouting traders, ringing bells, and millions of dollars changing hands every second. Most people would freeze. Most would turn around and walk out. But something extraordinary happened to one young man that day. Something that would unlock a psychological secret about trading that's remained hidden for nearly 6 decades. A secret so powerful, it would eventually make him responsible for 90% of IBM's trading volume, when IBM represented almost 20% of the entire S&P 500. I recently sat down with this trading legend, and what he revealed about the psychology of successful trading will fundamentally change how you think about the markets. But more importantly, it will change how you think about yourself as a trader. Because here's what I've learned in my own trading career. The difference between success and failure isn't in the strategy, the indicators, or even the capital. It's in something much deeper. Something that was forged in the crucible of human emotion, risk, and pressure nearly 60 years ago. Today, I'm going to share that secret with you. Before I tell you what happened on that trading floor in 1965, you need to understand something about the man who walked through those doors. His name is Richie Nesso, and his story begins not in the marble halls of Wall Street, but in the tough neighborhoods of Queens, New York. See, Richie grew up in an environment where everything, and I mean everything, was about winning and losing. Picture a 15-year-old kid sitting in his basement for hours, days at a time, flipping 4 decks of cards face down against a baseball hat placed against the wall. He's counting suits, tracking patterns, discovering that no matter what he did, clubs always came out on top. This wasn't just a game. This was psychological conditioning. When he played poker with bookmakers and wise guys, he knew which suit to bet on. When he needed a club in a high-stakes game, he had an edge. When he needed a diamond, he'd fold. But here's what most people miss about this story, and what I missed for years in my own trading journey. This wasn't about cards. This wasn't even about gambling. This was about developing what psychologists call emotional regulation under uncertainty. Every time young Richie risked real money, whether it was pitching quarters against a wall, playing baseball for cash, or sitting at those poker tables, he was training his nervous system to function under pressure. He was learning to make decisions when the outcome mattered. And that's the first psychological principle that separates winning traders from everyone else. You cannot learn to trade without risking something that matters to you. I see this mistake constantly. Traders think they can learn on demo accounts, paper trading, or with money they don't care about losing. But your brain doesn't engage the same way when there's no real consequence. The neural pathways that govern decision-making under pressure simply don't activate. Richie put it perfectly. You got to feel the emotion of risking. You got to feel what it is to lose. Everything is not fun and games. The revelation. So there's our 18-year-old walking into the NYSE in 1965. He gets the job as a runner, the lowest position on the totem pole. But then something happened that would change everything. They suited him up, gave him the special jacket, and escorted him into the trading room for the first time. Listen to how he describes it. The energy that came out of that room went through my bones from the top of my head down to the bottom of my toes. It was like you got hit with a boulder. But here's the crucial part, and this is where most traders go wrong. While others might have seen chaos, confusion, or intimidation, Richie felt something else entirely. He felt home. Why? Because his nervous system had been conditioned for exactly this environment. Years of high-stakes games, emotional volatility, and decision-making under pressure had prepared him for this moment. And that leads us to the second psychological principle. Your background shapes your trading psychology more than any course, book, or mentor ever will. Think about your own journey. What experiences have you had that involved real risk, real pressure, real consequences? Those experiences, not the trading education you've consumed, are what will determine your success or failure in the markets. But Richie's story gets even more interesting. Despite feeling at home in that chaotic environment, he struggled with something fundamental. He couldn't understand what a quote was. He didn't grasp bid and offer. The basic mechanics of trading were completely foreign to him. His boss, recognizing this struggle, sent him to the over-the-counter desk, what Richie called Dodge City. This was before NASDAQ existed. It was 1,000 people making markets in every stock that wasn't listed on the NYSE. It was raw, unfiltered capitalism at its most intense. And this is where the psychological breakthrough happened. The transformation. In that over-the-counter environment, Richie had to learn something that would become the foundation of his entire career: how to think like the market instead of fighting against it. See, when you're making markets, you're not trying to predict where prices will go. You're not hoping, wishing, or gambling. You're providing liquidity and managing risk. You're thinking in probabilities, not certainties. This experience taught him the third psychological principle, and this one is absolutely critical. The market doesn't care about your hopes, dreams, or financial situation. It only responds to supply and demand. Listen to how he explains his approach. I'm not here to gamble. I'm here to make a bet, and I'm here to be on the right side of the percentages of that bet. That distinction between gambling and betting on percentages is everything. Gamblers hope for outcomes. Professional traders assess probabilities and act accordingly. But the real psychological revelation came when Richie started handling enormous size. We're talking about million-share blocks of IBM, when that represented massive portions of the entire market. Most traders would be paralyzed by that level of responsibility. Not Richie. When asked if the size intimidated him, his answer was immediate. Never fazed me one bit. Whether it's 1,000 shares or 1,000,000 shares, it's all the same to me. Where does that psychological strength come from? His upbringing in that tough Queens neighborhood. A lot of stuff going on. Drugs, wise guys, a lot of stuff. Just my personality, I guess. But I think there's something deeper here. Something that applies to every trader watching this video. The pattern recognition. After nearly 60 years in the markets, Richie has observed something that should terrify and inspire every trader. The psychological mistakes traders make today are identical to the mistakes they made in 1965. You can beat their head against the wall, you can do anything you want, and they'll still make the same mistakes over and over again. What are these eternal mistakes? Let me break them down. Mistake hash 1? They don't know their personality. Richie emphasized this repeatedly. You have to know your personality because your personality dictates the level of tolerance and level of controlling your emotions. Most traders never do this self-assessment. They jump into strategies without understanding their own psychological makeup. Are you someone who can handle drawdowns? Do you panic under pressure? Can you cut losses quickly? These aren't strategy questions, they're personality questions. Mistake hash 2. They confuse complexity with competence. Richie uses only 2 monitors and focuses on 3 simple indicators: the 9 EMA volume weighted average and 3 1-minute charts of ES, NQ, and YM. That's it. Simplicity is best. You don't need all these things. When you start flipping around from one way to trade to another way to trade, one chart to another chart, you're confusing yourself and you're going to stunt your growth. I see this constantly. Traders think more indicators, more screens, more complexity will give them an edge, but complexity is often just anxiety in disguise. Mistake hash 3. They sell at bottoms and buy at tops. This is the big one. The psychological trap that has destroyed more traders than any market crash or economic crisis. Richie explains it perfectly. Markets come down, down, down. People get scared and sell at the bottom. Markets go up, up, up. Everyone's having a grand old time buying, but they don't have to handle down, down, down. But here's the psychological insight that changes everything. The market is designed to exploit these emotional reactions. The algorithm secret. This brings us to perhaps the most important psychological revelation in Richie's entire story. His understanding of how algorithms work isn't technical, it's psychological. Algorithms are written by a programmer, and they have to be written to go somewhere. Where are they written to go? These technical areas that we're putting out. But here's the key. They want to shake out the longs, and they want to get people short. What do the smart people do that are on the bottom of these algorithms? They're feeding into these people that miss the market. Think about what this means psychologically. The algorithms aren't just mathematical equations. They're psychological traps designed to exploit predictable human behavior. When the market comes down to a major support level and looks like it's going to break, what do most traders do? They sell. They panic, they assume the worst. But the algorithms know this. They're programmed to hit those levels, trigger those stop losses, create that fear, and then reverse. Those algorithms know that you sell a failed breakdown 85 to 90% of the time. And I know that those algorithms are going to make that print. This is why Richie can make $450 in 23 seconds, or $300 in 6 seconds. He's not gambling. He's not guessing. He's positioning himself on the other side of predictable human psychology. The personal revelation. Now, let me share something personal. When I first heard Richie's story, I was skeptical. The idea that someone could consistently profit from algorithmic behavior seemed too good to be true. But then I realized something about my own trading journey. Every time I've been truly successful, it wasn't because I predicted the market. It was because I recognized when I was thinking like everyone else and did the opposite. The most profitable trade I ever made came during a moment of absolute market panic. Everyone was selling. The news was terrible. Every indicator suggested more downside. But I remembered Richie's principle: be on the other side of stop orders. I bought when everyone else was selling, and I held when everyone else was panicking. Not because I was smarter or braver, but because I understood the psychology of the moment. That's the real secret Richie discovered 60 years ago on that trading floor. Success isn't about being right about the market. It's about being right about human nature. Conclusion. Here's what I want you to understand as we wrap up today's video. Richie Nesso isn't successful because he has some magical ability to predict market movements. He's successful because he spent 60 years understanding the one thing that never changes: human psychology. The algorithms may be more sophisticated now. The technology may be more advanced. The markets may be faster and more complex. But the emotions, the fear, greed, hope, and panic that drive every buying and selling decision, those haven't changed since 1965. They won't change in the next 60 years either. So here's my challenge to you. Stop trying to predict the market. Start trying to understand yourself. Know your personality, know your limits. Know when you're thinking like everyone else. Because in a world where algorithms are designed to exploit human psychology, the trader who truly understands their own mind and the minds of others will always have the ultimate edge. The secret isn't in the charts, the indicators, or the strategies. The secret is in the mirror. And that secret has been hiding in plain sight for 60 years, waiting for someone brave enough to look. What's your biggest takeaway from Richie's story? Drop a comment below and let me know. And if this video changed how you think about trading psychology, make sure to hit that subscribe button. Because next week, we're diving into the neuroscience behind why 90% of traders fail, and the specific mental exercises you can use to join the 10% who succeed.